A very warm welcome, ladies and gentlemen, today out of Munich, out of our studios, Commodity TV. And with me here is Royal Nickel, a very interesting nickel developer out of Canada. And is represented by Mark Selby. He is the President and CEO. And we want to talk about, of course, the nickel markets. That's one thing, but also about his terrific project in Canada. Mark, thank you very much for taking the time to come to us today.
Thank you for having the opportunity to talk to you today as well.
Yes, I love it, especially when we have a nickel expert there, which we already spoke about. You were also like a research analyst for Inco Resources, so you know a lot about the nickel markets. But let's go first of all, Royal Nickel, your company.
Yep.
What is it about? Give us a short little overview, please.
Yep. We've got the third largest nickel reserve. It'll be one of the 5 largest nickel operations when it's built. We're in the great jurisdiction in Quebec and in the Abitibi region, about 80 kilometers up the highway from Abitibi.
Wow.
Yep. Going to build a large-scale, low-grade nickel operation, and do in the nickel space what a Cisco did in the gold space.
Oh, I like to hear that. Yes, as I interviewed John Rosens a little while ago. Great. Abitibi Greenstone Belt. The whole region is perfect with the infrastructure. Everything is there. Your project requires a lot of money, of course. It's a very large project. It's $1.2 billion, I think.
That's correct.
But first of all, let's talk about what has the project so far. You have a definite feasibility study. Give us a bit of an idea. What do you have as an asset?
Yeah, we finished the feasibility study last July. We'll have permits in place by the end of the year. So with financing in place, we could start construction in early 2015. So we're one of the few projects globally that'll be ready to start construction in 2015. But first ore through the mill in 2016 and ramp up to full production during 2017.
Are there any hurdles with permits?
No, we've finished the public hearings phase of the process in the process in Quebec. At this point, we're on a calendar basically with the government. So there was no surprises during the public hearings, and we expect to have that permit in hand by the end of the year.
Great. Of course, the 1.2 billion are an issue. We talk in a minute about of that.
Sure.
But let's give us some metrics about this project. How many tons of nickel you have? What could be the mine life? What is the IRR?
Sure.
Give us a bit an insight of that.
Yeah, so we've got a contained reserve of billion tons, containing 3 million tons of nickel. There's another almost billion tons of resource that's there, and it's open at depth across the entire 5 kilometers. So this will be a project that will last for many, many decades. Just the reserve alone supports a 33-year project life. We'll generate over $400 million EBITDA annually, almost $250 million in free cash flow annually. We started at 33,000 tons of nickel a year. We double the mill 5 years out and get to production over 50,000 tons of nickel a year. That puts us just behind Voisey's Bay in terms of total nickel output. That yields a project NAV of just over $1 billion. And every dollar a pound increase in the nickel price above $9 adds $500 million of NAV. So going into the nickel market that we're expecting, there'd be tremendous upside, I think, to that project value.
Yeah, I think nickel was this morning $8.92, if I'm correct.
Yep.
So you're quite close to the $9. I like that.
Exactly. Yes.
And as we have spoken already, we both think that nickel goes higher. That's great. $1.2 billion.
Yep.
That's a big chunk of money, of course.
Yep.
We know money is a bit tight. Still, it opens up. I think there's a light at the end of the tunnel, as I always say. How do you want to finance it? What could be an idea?
Yeah, so our board management team came out primarily from Inco and another piece from Falconbridge. So we're used to working in multi-billion-dollar environments. In terms of that, the CapEx, that is the big question. We've been working with Rothschild to put together a project senior debt facility. They believe we should be able to raise between $500 and $600 million. So given the nickel market, we expect to get in around $600 million as a senior project finance facility. Again, with our Inco connections, we have significant contacts back into most of the nickel and stainless steel industry in Asia and elsewhere. We expect to sell 40 to 45% of the project for about $400 million in terms of their share of the capital expenditure and their buy-in. That would leave us with about a $300 million capital raise. Of that, we think 150 to 200 million could be raised by selling the offtake for our 60% of the offtake that we'll keep. We have a PGM stream that we'll look to monetize, and that would leave an equity raise somewhere of 100 to 150 million dollars.
Okay, but it's manageable, sounds to me. Because your market cap today is like 60, 70 million dollars. So that's, let's say from today, let's put it like 2.5 times the market cap. But as far as nickel prices move, we hope the price of your stock goes higher.
We think the nickel market's going to continue to move through the fall. And as we get planks of this financing plan in place. We'll announce them and hopefully get a re-rate each time we do that. So, we expect to do that raise in the first quarter next year, hopefully at a much, much higher price than where we are today.
What's the situation today? What is money in the bank? Do you have enough funds to go through the whole process until you are financed and you can really start to build a mine?
Yeah, so we basically just did a small raise last week. We've got some long lead items that we need to continue to advance to keep it on schedule. We have enough money in the bank to keep the company operating well into 2015.
Okay.
If we continue to advance the project, we'll need additional capital, but we believe we'll be able to either bring the partner in time or do some other financing that'll be non-dilutive that would allow us to keep the project on track.
What size of capital do you think you need in addition then?
Well, in the fall, we'll probably need in the range of $20 to $30 million, but again, we think we've got some non-equity sources to be able to bring that to the table. And then again, we expect to have the partner in place before year end. And then a production decision sometime in the first quarter next year.
As the nickel price is key for your project, as you calculated, I think with $9 was
Yes.
the definitive feasibility study, and you did a sensitivity analysis up to $11, I think, which of course is very positive, as you said it already. But what is your feeling as now let's speak for a second as a market analyst.
Sure,
please.
okay.
What is your feeling for the next 6 to 12 months?
Yeah, so I've covered nickel for 15 years, and I've gone on the upside, made a lot of money shorting nickel in 2007.
Okay.
I believe nickel is going to be one of the great commodity trades of this cycle. Indonesia took out 25% of world supply with their ore ban in January. We think that's going to push nickel prices back up to the $30,000 to $50,000 a ton level that we saw back in 2006-07.
We had it already.
Yes, yeah, that's $15 to $24. And we think because there's a structural shortage of nickel supply through the balance of this decade, that nickel prices are going to remain at elevated levels for a prolonged period of time. So, and we're quite fortunate to have one of the few nickel projects that can take advantage of this nickel cycle coming.
Great, super. Maybe one word to the Indonesian ban.
Yep.
Because I think a lot of people that read about it, but can you give us a short explanation what it meant now for the nickel prices?
Sure. Yeah. So the Indonesians put it as part of a mining law in 2009. They want to see processing and jobs in the country. They did the same thing in the tin market back in 2002, and they've kept it in place for 12 years. And not only kept it in place, they've ratcheted up the amount of work that people need to do to process tin in the country. So we don't expect any change in that ban going forward. They provided ore to China to make a nickel supply, which is almost 30% of world supply today. So that is going to, over the next 6 months, you'll start to see that shrink dramatically. The Chinese built some more stockpiles in advance of the ban happening, but now they're working those stockpiles down, and we think by the fall you'll start to see LME inventories roll over, and at that price basically we will run out of nickel sometime between mid-2015 and mid-2016.
So it's getting really interesting
It'll
for your
be
project.
Very, very interesting in the market.
You have to come online with the project, otherwise we miss the nickel.
Oh yeah, no, we'll get there.
Super. Last question, or let's say last two questions.
Sure.
What is management share in your company? Who are the largest shareholders? And what is the main objective you want to reach this year?
Okay, so management insiders have 9%. Our largest shareholder is Rab Capital. They held 8% before we IPO'd. They've doubled down their position. They've been a great long-term supportive shareholder. The Quebec government has a few funds that have a couple percentage points in the project as well. For the project itself, basically permits, have the financing plan in place by year end, and have a partner in place so that we can start construction early next year.
Super, that sounds good to me. Thank you very much. All the best for that, and I hope that we can report soon some more milestones.
Yes, thank you. I look forward to coming back again soon.
Great, Mark, thank you very much.
Thank you.
Ladies and gentlemen, that was Mark Selby, the President and CEO of Royal Nickel. Well, you heard it, it's a $1.2 billion project, and it is manageable, it is financeable, as Mark was in former years with Inco also, and they have sensational contacts in the industry, also in the finance industry. And yeah, nickel is not only used, but it is needed. It goes into a deficit, and this is the best. We all learned this in university in the first semester. If the supply is lower and the demand is higher, prices go up. We see it. Actually, he thinks prices will go way much higher than today. We see it the same way. So let's see what they do with the company, and hopefully this project comes online. Check out the company. Thanks, and bye-bye from Munich.